This is a public meeting, by the way.
Yes,
Is it?
that's correct.
Are you recording this?
Yes.
Okay.
And Larry, did I guess our current chair is Colin Hostin. Did he was invited? I'm assuming,
That's
right?
Right. Yes, so I think we are still waiting for Colin.
All right, let me text him.
Let me make sure he received an invite.
Tom, is Karen from your purchasing area joining?
I didn't ask her to join at this point. I mean, I'm gonna be able to talk to you know what she's working on, but
Okay,
Henry, did we invite Angela or we have it covered?
I don't think so. This was more of the audit controllership side. Sharon joined because there was an issue about purchasing and procurement
I saw that,
in the
yes.
management letter, so I figured she could join and talk about what we're working on.
Okay, I think the gang's all here.
Apologies for my tardiness, everybody.
It
Hey,
still says I can't screen share.
You can now.
I can. All right, so you guys let me know when you can see my PowerPoint.
You're up there.
Good.
Can't see it.
Okay, great. Well, thank you very much for having me here today, Friday afternoon at 3 o'clock. So in terms of an agenda today, I just wanted to kind of share with you the scope of what our audit was, share with you the audit results, a few of the financial highlights within the CAFR itself, go over the federal and state single audit results, and the testing that we performed, some required communication to the audit committee, and then talk about some upcoming GASBs, and then share with you why this PowerPoint does not say Bloom Shapiro, but says CLA. So we'll talk a little bit about that. So in terms of the scope of our engagement, I just want to reiterate that it's management's responsibility to create the financial statements. We come in as an independent reviewer of those financial statements, and we express an opinion on whether those financial statements are in accordance with GAAP. We also express an in relation to opinion on the schedule of state and federal financial assistance, and on compliance of state and federal major programs. In terms of an internal control side, I just want to share with you that we don't opine on internal controls. We do get an understanding of the controls from a financial statement number standpoint. So if something along those lines during our audit have come to our attention, we're certainly going to disclose those to you, but we don't opine on internal control. We do provide a report on any significant deficiencies or material weaknesses that we note during the audit. That's for the financial statements as a whole, as well as the state and federal single audit programs that we test. And so now I just want to share with you the audit results for 6/30/2020. On the financial statements as a whole, you received an unmodified opinion. So that's something that you would want to receive each and every year, and you did so again. And there's no findings, no significant deficiencies or material weaknesses to note to you over the financial statements as a whole. Good news there. In terms of the federal single audit, you also received an unmodified opinion on the major programs that we tested. There was no compliance findings as a result of those tests, the testing that we performed on those programs. We do have one significant deficiency over procurement standards, and I'll go over that a little bit more when we get to that federal single audit section of the agenda. And then on the state single audit side, again, you got an unmodified opinion on the major state programs we've tested. On the state side, there's no compliance findings or any significant deficiencies or material weaknesses as it relates to state programs. And then I just wanted to share with you some of the exhibits within the front of the CAFR, some highlights of financial information, just so that you guys are aware of them. I tried to put the page numbers at the top. So this slide that you're seeing, slide 8, is actually an excerpt from the management's discussion and analysis, but is also the statement of net positions, exhibit 1 on page 13. But I like to give people this MD&A slide just because it gives you some comparatives. So just to explain, this particular slide is on the full accrual basis of accounting. So it will include all of your capital assets, all of your long-term liabilities. It includes all of your funds, with the exception of pension, OPEB, and your agency funds. And they're designated in 2 separate columns. So the governmental activities are all your government funds. And if you see down at the bottom, total net position is, these are in thousands, so that's 271 million as of 6/30/2020. And that's an increase of 32 million from last year for your governmental funds. And then the second column there, the business type activities, that's your WPCA and your parking authority funds combined, because those are enterprise funds on the full accrual basis of accounting. So they have a different opinion unit name. Business type activities, total net position is 128 million. That's an increase of 5 million from last year. And if you want to see it in more detail, you can certainly look at page 13 within the CAFR. This next slide, slide 9, just gives you a snapshot of the balance sheet for your governmental funds. It can be seen, it can be shown on exhibit 3, page 15 of your CAFR if you want to go back to look at it. This is basically a snapshot as of 6/30 of the position of the city for your governmental funds. And you'll see down at the bottom, total fund balance for the general fund. These are not rounded numbers, so that's 73 million right there for the general fund. And that's a slight decrease of 836,000. You have your capital projects fund that has a fund balance of 21 million, and that will fluctuate depending on when you expend the funds for your projects and when you receive permanent bonding for those projects. And then that non-major governmental funds column is all your smaller funds combined together for a total fund balance of 12.1 million, and that's up 5.6 million from last year. And there is a schedule in the back of the CAFR if you want to know what makes up those totals. It is detailed out for you by fund. The next exhibit I wanted to show you is exhibit 5 of the financial statements that can be seen on page 19. Again, these are your business type activities, and it breaks them out by the WPCA and the parking authority. Total net position is 108 million for the WPCA. That's up 5.9 million from last year. And the parking authority down slightly, 317,000 from last year. Total net position of 19.9 million. That last column on the slide, internal service funds, that's actually your insurance fund and your fleet maintenance fund. That's down 3 million from last year for a total net position of 4.7 million. And then lastly, you have your fiduciary funds that can be found on Exhibit 8 on page 22 of your financial statements. And this shows your pension and OPEB trust funds, private purpose trust funds, and your agency funds. And I will share with you the changes that will go into effect next year with those agency fund columns. But your net position for all of your pension funds combined, 538 million. Private purpose trust net position is at 92,000. Just to give you a snapshot of some of the details within the balance sheets and the exhibits I just shared with you, I just wanted to touch upon the general fund. Total fund balance is 73 million. Committed balance of that total is 3.9. Assigned fund balance is 10.7. And I just want to bring to your attention that that 10.7 million does include 8 million that you've designated to balance your fiscal year 21 budget. So that's why that number is higher. And then your unassigned fund balance is 58.4, and that's about 16% of your fiscal year 2020 expenditures. Your tax collection rate has stayed steady at 98.3%. Not sure what will happen next year going into 21, but right now most of the tax collection rates within the state have stayed pretty stable. And then just to highlight some of the footnotes in the CAFR itself, in particular, your pension fund status. So you have 4 pension funds right now. Your employees plan net pension liability was 58.7 million at 77% funded. Fire benefit fund net pension liability is 29 million, and that's 78% funded. Your police benefit fund had an MPL of 42.3 million at 74% funded, and food service plan NPL was 1.6, and that's 61.67% funded. So all in all, your pension funds are doing very well in terms of the liability that's being funded. And then of course, at the end, there's the OPEB plan. The net OPEB liability currently, as of 6/30/2020, is 29.3 million, and that's 78.5% funded.
Can I ask a question that with the OPEB? I thought it was like 100 and something million, and we were nowhere near funded on that. That's like the health insurance?
We were about 50 or 53% funded last year. But with the changes in assumptions and returns, it's worked out to 78%. We did change actuaries with subject to an RFP, and they examine all of the assumptions that were done before. They verify the numbers, and just based on the ending results, we're at 78.5%. It is a jump from what it was historically. I was very pleasantly surprised on that one.
And that number is very volatile, and it obviously has to do with the actuarial assumptions, and it's a significant estimate within the financial statements, but that's what your actuary is coming up with that right now based on the position of your fund.
Okay.
Moving on to the federal single audit. The city spent 26.6 million in federal assistance expenditures. And based on our risk assessment, based on the uniform guidance, we tested the WIC program, CDBG, and federal transit cluster. So we're required under the federal government to make sure that you've complied with certain attributes for each of these programs. You've received unmodified opinions. Like I had said, there's no compliance findings, but we did note that the uniform guidance procurement standards that were actually in play July 1 of 2018, so fiscal year 19, uniform guidance was requiring that everyone change their procurement standards to list certain things and make sure there's specific language within those procurement standards. And so we just want to make sure that you update that to make sure that you have the proper language in there.
Could I ask a question? What made that finding significant versus just being a finding?
So there's two levels of, there's two levels of internal control findings. There's a significant deficiency and a material weakness. Because it's reportable to you, because we're saying you're not, you know, that the standard is not up to the uniform guidance requirements, we're considering that a significant deficiency. It's not a material weakness, but because it's material enough to know it, it's called a significant deficiency.
Leslie, could you just add some of the context you shared with me? Number one, what do your other clients in Connecticut look like regarding this uniform guidance? And secondly, how hard is it to comply? Is it just language and policies and procedures? How challenging is it to comply?
So Henry, sure, I can do that for you. So a lot of our clients did receive this finding last year. Some of them have even gotten it repeated this year. It's not too much of a heavy lift because most of our municipalities have stringent procurement policies in place anyway. So their thresholds for the different levels of transactions and procurement contracts are already embedded in their already existing policies. It's more of uniform guidance put in these must languages. You must specifically state you're in compliance with uniform guidance. You must state these following things. And so if you go through the checklist, most of our municipalities in the state didn't have that language in it. So what most of our municipalities right now are doing is a cross bridge. So they're taking their existing policies, doing a crosswalk and saying, this is where you can find this, you know, saying they're in compliance with uniform guidance, getting that approved by legal as well as getting it approved by the council. And that has been kind of the norm in terms of following this requirement.
Okay, thanks. Sharon, do you want to talk about where we are and what our plan was to handle this?
Sure. Good afternoon, everybody. Back to Leslie's point, basically doing the crosswalk of the CFR, all those sections and crosswalking it to our city code items in the purchasing guideline, identifying where it is applicable or meets the standard. And then if it doesn't meet it, show show the language and then show the change, how we're going to meet that language within the purchasing guideline. So we do have a purchasing guideline. It's, you know, it's back to the point of doing the crosswalk back to it, making sure everything's current.
And then we'll review it with legal, go through getting the council to approve it. So we would hope by next year's audit, we would be in compliance.
Yeah.
And Sharon's working on the city side.
City side.
Tom and Karen will work on the Board of Ed side, but I would expect that we'll all be in compliance for next year.
Right. Can you hear me?
Yes.
Yes.
So on the Board of Ed side, we have a board policy that deals with procurement, and Karen, our purchasing agent, has gone through that, and it's really a rudimentary policy and needed to be updated anyway. And so she has obtained copies of policies from other school districts that are in compliance, and she has the the language that the federal government now requires. I think a lot of it has to do with conflicts of interests and things like that. And so she this week provided me with a draft of a policy. I still need to go through that, and Henry and I had talked about possibly working together just to kind of have our policies be sort of coordinated and in sync with each other. and the Board of Ed side, we would have to go back to our board. We have a board policy committee that meets on a monthly basis. So we would expect to go back to them sometime within the next 2 to 3 months and have this finalized before we get to the next audit.
Great.
So just to be clear, because, you know, when this, if you can go back a slide, when this becomes, when individuals read this and they see the term significant deficiency, this does not translate to any type of financial loss or misuse of any dollars or anything of that nature. Is that correct?
That is correct.
No,
So it's more of a guideline update that needs to be made, is
Just a policy change.
a
from an
policy
internal
change. So,
control
okay.
standpoint.
Yeah,
Greg, I think that the terminology significant deficiency in the auditing world, and Leslie, correct me if I'm wrong, but I don't think you have just a plain old deficiency. I think you have either a significant deficiency or a material weakness. Those would be the
Correct.
two,
Right.
you know, the two findings, if you will. So it's not like you could have said this deficiency is a deficiency, but it's not, you know, well, I mean, I guess if it's going to appear in the federal single audit, it's going to be a significant deficiency or material weakness. It's not going to just be a plain old deficiency, correct?
Unfortunately, yes, that's the language in our industry that's required. So yes.
Right. And I understand that. I'm kind of putting my NORC taxpayer hat on, and I'm reading this in the newspaper and I see significant deficiency and I'm thinking, okay, so how much money was lost? And that's not the case. So I'm just trying to get clarification on that.
right, Greg, I like to think of this as, these are internal controls. These are policies and procedures that we put in place to prevent improper activity, to identify it if it does occur and then rectify it. So there have been deficiencies in possibly our policies and our making sure that those policies are implemented. But translating to the actual financial statements, actual losses has not occurred. This is preventative. And it's highlighted, we take it very seriously, and we will work on an action plan so that it's rectified in proper time.
Right. I'm just being overly sensitive to the fact that we woke up this morning to the fact that a former employee was arrested for not following the proper procedures.
Absolutely.
I don't know, I'm not going to go into the details, but yeah, you know, I'm just being overly sensitive to that fact.
Fair enough.
I've got one quick sort of, I guess, a follow-up question. Was this not identified in last year's audit, or has the auditing standards changed? Is that why it appears this time and not last year?
So I can't obviously attest to a different auditor since I'm new to the city. However, I know that the procurement standards are not necessarily required to be tested depending on what major program you're required to test each year. So some municipalities kind of got off, so, you know, kind of got a bye year if the programs that they were testing didn't have to be, that attribute didn't have to be tested. So unfortunately, it could possibly have not been mentioned because of that. We've been mentioning it even in the management letter if that has happened and we didn't have to necessarily test it from a compliance standpoint. We've been telling our clients to make sure that they comply even if there wasn't a finding, but I obviously can't speak to the other auditors.
Thank you.
But it is, Leslie, it is a relatively new issue, right? It came up, was it 2 years ago was when it first surfaced?
Last year, actually, fiscal year 19. So, you know, a lot of our municipalities in the state are a little bit behind the 8 ball on this one. And Greg, to your point, from a layman's taxpayer's perspective, I would just mention, you know, it didn't impact the compliance requirements of the grant. You still received unmodified opinions on all the grants that we tested. So if that makes, you know, it feel better to a taxpayer to know that, that's something to note as well.
Thank you.
Moving on to the state single audit side, the city spent $43.4 million on state financial assistance programs. We tested 4 programs: priority school districts, Medicaid, early care and education, private tax exempt property reimbursement. There's no unmodified opinion on those programs and no findings to report to you on the state side, as mentioned. And then moving on to our required communications. This past year, there was no new standards adopted. The GASB decided to postpone all of the GASBs that were applicable this year due to the COVID pandemic, which we're very grateful for. So we did get a bye year this year in terms of new standards. In terms of significant estimates within the financial statements, the useful lives of capital assets will certainly determine the estimates of your depreciation values within the financial statements, and net pension liability and net OPEB liability, like we discussed, are really based on actuarial assumptions and data that they receive, so that those two are also significant estimates within the financial statements. But all in all, there was no disagreements with management this year. They've been very helpful throughout the whole process, especially with COVID and being remote and having their offices closed. So thank you to Henry and Chitsime and Kristen and Tom and their whole team for helping us through this year. Being a new auditor, encountering remote situations was, you know, could be challenging, but Norwalk was very accommodating, and we certainly appreciate that. So there's no real difficulties encountered, no uncorrected misstatements, and no independence issues that we saw. So now I just want to go through some of what we call management letter comments. Now I know we've been talking about this word significant deficiencies and material weaknesses. Those are the ones that get written within the opinions of the financial statements, or at least the internal control letters. We do issue a separate document that we call the management letter that really are just improvements, things that we've seen throughout the audit process that we don't think rise necessarily to the level of a significant deficiency or a material weakness, but something that should be noted and corrected so that it doesn't rise to that level. So these are items that, you know, you should be dotting your I's, crossing your T's, some things that could be improved within the internal controls of your financial management systems. And so I'm just going to go and share with you very high level, and certainly ask questions and dig in more, and Henry can share with the group where you guys are with these recommendations. But I'll just start by sharing the first comment that we had in this letter. And that's related to Munis not really tying up one-to-one with the financial statement presentation. And so basically what that means is that you have, in our world, in our auditing world, we have definitions of fund types and certain revenue sources that preclude you to have a certain fund type within the financial statements. And that pretty much tells you where in the financial statements these funds go. So in the City of Norwalk's financial management system, they have certain funds, kind of different types of funds commingled in one financial management system fund. So it just causes some inefficiencies in trying to find out where the numbers are and how to present them in the financial statements that the GFOA and the GASBs want it to look like. So there's a manual process right now that needs to happen before Chitsime can give us those numbers. So we recommend that someone goes through that and make sure that it's allocated and set up more efficiently to be in line with the financial statement presentation. I think that will alleviate some stress on the finance office, and it'd just be a little bit more cleaner when the auditors come to look at those numbers.
Leslie, I just want to comment on that. Just to update you, we are taking action on that this year by creating separate funds for those different programs. That way it's all not commingled in those Fund 03, Fund 04, and Fund 40, and it'll alleviate the Excel-driven spreadsheet. So that one will be corrected when you come in to do the audit.
That's great, Chitsime, thank you. Uniform guidance, we already talked about. That was the significant deficiency that we noted in the single audit. We reiterated it here just to make sure that you are all aware that the policy needed to be updated. And then I just want to share the general ledger maintenance and improvement. There's a lot of things embedded in this one comment. As a board, I encourage you to look at that, read it, ask for responses, follow up with the city on progress of these. Just to highlight some of the items kind of embedded in here. And again, this is just related to crossing your I's, dotting your I's, crossing your T's, some improvements that we think could be made to the city's internal control system. Bank reconciliation variances timely researched and rectified is one of them. Segregation of duties between the human resources function and payroll. It's always a concern of ours. I'm sure it is for any entity. And then reviews and processes, right? So someone should be reviewing all the journal entries. Someone should be approving payroll registers. There should always be a checks and balances. Someone's preparing something, someone's reviewing something. So through the course of any internal control system, you definitely want to have those checks and balances in those certain areas. So we noted some of them here. Certainly we didn't mention all of them, but as a general rule of thumb, you want to make sure, again, that there's a preparer and a reviewer. Just as a best practice. Vendor listings should be approved periodically. Let's see what else is on here. There's a couple controls surrounding census data. Again, someone should be preparing the census, someone should be reviewing that. We did see some disconnects between what we saw in the census files versus what was given to the actuary. Again, not material in nature that we knew of. Student activities can sometimes be a risk with high dollar amounts and decentralized cash locations. So you just want to make sure that there's control surrounding the student activities and the financial reporting in those regards. Does anybody have any specific questions regarding that? Henry, did you want to add anything?
I wanted to elaborate. Having worked here for almost 2 years now, Chitsime and I have talked about this, and they have been working with absolutely no bench. They had one person who was ill, who then very unfortunately passed away. There have been vacancies, and I concluded we needed some senior level assistance. And right now we have a posting for a deputy controller. I wanted someone, there are several processes where only Chitsime can handle it as the senior person. I wanted to get some senior level help. I want to have a backup. And I want to have those checks and balances so that if Chitsime does it, someone else can look at it and back and forth. Because while we may have not had a problem yet, that's what controls are there for, to avoid the problems. So we're looking at hiring the senior level deputy controller and getting them involved, especially on these internal control processes. As I said, I don't think there are problems today, but this is area where we could improve. And we have a list of things that when the person gets hired, we would want them to start cleaning it up. Let's say where you have certain activities that aren't performed as frequently and as timely as I would like, or some activities, whether it's computer processes or procedures, that we should be able to tighten up. So that's a major piece of rectifying this issue.
Great, thanks, Henry. And then the other two comments and recommendations that we have are just really based on the risk of fraud. Obviously, cybersecurity is front of mind for most folks now in this COVID environment, but there should always be time to step back, look at your, riskier departments, see if a risk assessment should be done. That can either be done formally by someone outside or can be done informally within your organization. It's entirely up to you. But assessing those risks and doing an evaluation of those riskier departments is definitely best practice. Certainly a fraud tip line is something that's easy to implement for most municipalities. So we do recommend that you do offer that service.
What would you consider a riskier department?
It's going to be departments that have any cash collections or decentralized cash locations. So, I mean, obviously your tax collector's front of mind. It has the most money coming in and out of the department. But in terms, not only just in terms of dollar amounts, if you have, an outlier that does collect cash, those tend to be riskier departments.
And we have been working
station or a Parks and Rec or something of that nature.
We have been working on minimizing cash collections. So Parks and Rec, for example, the parking lots at the beaches, we scan license plates rather than having a high school kid taking the cash in. So as Leslie pointed out, the dollars aren't large, but when you're handling cash, the controls are harder to enforce. So you do an assessment based on the size of the cash or the size of the dollars involved, like tax collection, as well as the nature of the activities. We have a lot of online where we vet the cash processor, if you would, the credit card processor. We deal with different credit card processors with different software applications that we're using. But I think it would be healthy bringing in a fresh set of eyes to just look it over, doing a fraud assessment, and then you do the 80-20 rule, the areas with the largest risks where you focus on those controls and see if we can tighten them up. And at the same time, we'll look at a fraud tip line and figuring out the best way to implement that.
Thank you, Henry.
Sure.
Okay, so moving on to some of the new GASBs that are coming down the pike. So next year, we have 3 GASBs coming into play. The only one that's really going to impact the city is going to be GASB Statement 84 on fiduciary activities. So the old agency funds and how those are recorded are now going to be changed. We will work with the city to go over all those agency type funds that are currently on your financial statements in accordance with this new standard to see where they're going to be plotted within the financial statements. So some of your agency funds may be embedded in governmental funds now, or they may be this new title called custodial funds, which will have not just a balance sheet, but also a P&L. So look for changes on that. And we will be helping both the city and the Board of Ed go through those checklists with the standard to make sure they comply. The following year, the the biggest lift for the city is actually going to be GASB 87. On the FASB side, this concept of leases has been out there for forever. They keep delaying it. GASB got on the bandwagon, but didn't delay it. So we're the first up now, I guess. So that's going to be implemented in 2022. The most important thing that the city can do now in terms of this standard, because it is a pretty significant standard, is to start to develop an inventory of all of your leases. So embedded in this standard is not just going to be capital leases, but operating leases. And it won't just be if you're the leasee leasing equipment from an outside party. It could be you're renting land or space in a building. And so it's widespread, and some of these contracts can be very confusing and will take some time to value in accordance with the standard on the balance sheet. So it's good to get started now. We just want to let you guys know this is a heavy lift, and you guys should be at least starting to get the process moving so that you're ready when the standard is now applicable in 2022.
May I ask you a question about that?
Sure.
Some of the leases that the city has are leases of space to not-for-profit organizations or agencies. And those leases are valued, I think it's a very small amount per square foot. It's almost de minimis. Is that the way those leases would be valued, or would they be valued at fair market or something else?
Depends on the contract. So it depends on a few things within the standard. So the key is that you need to evaluate all of your contracts, regardless of the dollar amount, to make sure that you're valuing them appropriately. If you go through the checklist in the standard and you've determined that, yes, this is immaterial, you don't need to worry about it, that's fine, but the analysis still needs to be done.
I see.
So Leslie, just another follow-up question. So this standard applies to both property that we may be leasing to others, as well as property we may be leasing from others, as well as things like copier leases and so forth?
It includes all of it, Tom, unfortunately. Leaseor, leasee, things that we used to say are just operating leases and they were a quick footnote. They all need to be reanalyzed under this GASB. Okay, and then last but not least, in 2023, there's nothing too substantial. They're very specific GASBs on certain transactions, so we don't think that it will apply too much or have an area of concern for the city right now, but I wanted to list them out so that you know that they are coming down the pike. And then lastly, I just wanted to talk about why my slides now say CLA. So we have, through a purchase agreement, Bloom Shapiro has become members of the CLA family, effective 1/1/2021. So we are now all CLA employees. But it can assure you that their values are the same. The culture is the same as Bloom Shapiro. In the last few months, I've been in very many meetings with all of the leadership there, and there's no question that the values and the culture is the same. In terms of how it impacts Norwalk, we are going to be heading the Northeast in our government market, well, actually the firm's market. So all of the teams will stay intact. You'll have the same, you'll see the same team. Hopefully it'll be seamless as possible, but we're hoping that we can give better resources and more resources from a national level. CLA is a national firm. They have a very robust state and local government presence. They have, they're actually the largest single audit preparer in the country. They serve about 3,500 governmental clients. So we're bringing their resources to you, but still having that seamless Bloom Shapiro small firm feel. So we're hoping that that'll be a great move for us, for our clients, as well as our staff. My contact information is here. If you ever need to talk to me, you could certainly ask Henry and Chitsame. They know where to find me as well. Does anybody have any other questions?
Nope.
Okay, well, thank you so much.
Thank you.
All right. I want to thank all the members of the Audit Committee for their time and helpfulness here. And of course, Leslie and I'm sorry, you'll always be Bloom Shapiro to me. I can't.
That's okay.
My father still calls it Idlewild Airport, so, you know, we go with the original name. So thank you for your team. Is a first-year audit, which is not easy, both on your side and Chitsame's side. And we added COVID just to make the degree of difficulty higher.
Why not?
And I think we came through all as a team very well. We appreciate your constructive comments. We take them seriously to improve everything that we're doing. And we report back to our audit committees, council, BET, anybody who wants to know. So thanks, everyone. If there are no more questions, we'll wrap it up and we'll wish everyone a good weekend. Do I have a motion, Greg? Motion to adjourn. You're the expert.
No, but yeah, Henry, before we adjourn, I did want to ask, so what is the next step with this audit? Is this completed? Is this considered the audit review and the stamp of approval, or is there further entities that need to look at this presentation?
This is usually it on the city side. We get the
Okay.
audit. This is the city's review, a specialized audit committee who has knowledge and expertise. Tom and I take this, obviously, Chitsame, Kristen, the whole team. We take the comments and we work on action plans to improve. And in about 3 months, we started again with pre-audit activities. So that's how the cycle works. But yeah, this would be the end of the review.
Great, excellent.
Okay.
Thank you. Motion to adjourn?
So moved.
Okay. Thanks, everyone. Have a wonderful weekend. Thank you, Leslie.
All
All
right.
right, take care.
Thank you.